A recent survey by the Association of Professional Builders revealed that nearly 40% of residential home builders did not understand the difference between markup and margin. This is something every custom home builder must know in order to predict profitability and avoid leaving money on the table when pricing contracts and variations. Unfortunately, many builders think they are pricing their jobs based on a desired margin, whether that be 20%, 25%, or 33%. However, what they are really adding is a markup, which results in a margin of 16%, 20%, or 25%. That is a huge difference between expected profitability and the actual profit being applied. Throw in some cost overruns and on-site delays, and it's easy to see why these builders end up making little or no net profit on their jobs, leaving them effectively working for a salary. That's no way to run a business. But it's no wonder builders are confused about markup and margin. The terms are constantly used in our industry interchangeably, and I've even seen documentation from a major industry association that used the term builder's margin and then used an example of how to calculate it by adding a markup. So if you find yourself a little confused over what is markup and what is margin, here's a quick explanation to help you. Markup is the amount of profit as a percentage of your cost of sales. So if a job is costing you $400,000 in labor and materials and your contract price is $500,000, then the profit is $100,000. $100,000 as a percentage of $400,000 is 25%. Therefore, the markup on this job is 25%. However, margin is the amount of profit as a percentage of your revenue, i.e. your contract price. So, using the same example, $100,000 as a percentage of $500,000 is 20%. Therefore, the margin on this job is 20%. What tends to happen with a lot of builders is that they add a 25% markup, but then look at their revenue and think that 25% of that revenue is profit, which obviously it's not. This is a problem that can compound over time when the builders do not factor in the work in progress accounting adjustment figure into their accounts at month end. Therefore, the financial reports in Xero or QuickBooks make no sense, so they focus on cash in the bank instead. The problem with focusing on your cash as a custom home builder is that building new homes is cash flow positive. It's important to remember that cash is not profit and profit is not cash. They are two very different things, especially in a custom home building company. To gain a better understanding of the financials in your custom home building company, click on the link below and watch the short video for residential home builders.